Hi, I'm Tom Selzer from Livewire Markets, and joining me today is Sam Garetano from Brookfield to offer his expert view in the infrastructure sector and what it can offer investors right now. Thanks for joining us, Sam.
Thanks for having me, Tom.
So the infrastructure sector offers a lot of benefits to investors, but do you mind just giving a brief overview of the key characteristics?
Yeah, I'd say today more than ever, infrastructure is playing a more important role in investors' portfolios. I'd say for a couple key characteristics. What I'd really summarize is first is just returns. Infrastructure can provide really strong risk-adjusted returns through market cycles. Investors get diversification because you're investing in assets that provide an essential service. The counterparties to our investments are typically investment-grade corporations or governments that really provide stable, predictable cash flows. Infrastructure is often viewed as an inflation hedge because in our revenue frameworks and the types of assets we make, we have usually direct inflation escalators. And then ultimately, many investors also view infrastructure as a way to get a pretty attractive yield because we're investing in assets that have strong cash flow profiles with distributions that we can ultimately provide to our investors. And when you combine that, I think infrastructure is just playing a more and more important role in investors' portfolios today.
It's an important part of the Brookfield strategy, but could you be maybe a bit more specific about the exact role that it can play in an investor's overall portfolio?
Yeah, I'd say today there's a lot of different ways we're seeing investors implement private infrastructure in investors' portfolios. I'd say historically, many investors have had what I would describe as more listed infrastructure. Investing in similar type projects, just the difference there is you're sometimes exposed to public market beta. When we're investing in private assets, right, these are non-traded, they're non-listed, and the valuations are really based on the cash flow profile of an investor. And so ultimately the experience our clients have is, they view infrastructure as a fixed income replacement. But I would say at Brookfield in particular, how we think about building our portfolios or the types of assets we invest in, it's better than fixed income because you get the inflation protection mechanisms. And then a manager like Brookfield, we can actually enhance value through an operating approach and really drive business plans to potentially drive growth in the investments. And it starts looking like a lower risk equity investments. And so depending on each investor, some view it as a fixed income replacement, some sell down other private market asset classes, some kind of complement it to real estate exposure. And so there's a lot of different ways that infrastructure can be implemented in someone's portfolio today.
And what would you say is some of the biggest challenges or as well as the opportunities in the sector right now?
First and foremost, when we think about infrastructure, the opportunity set is only growing. The asset class definitely feels very popular today, particularly in media headlines. But in our view, there's still not enough capital, particularly private capital, to invest in a lot of the opportunities. Historically, people viewed infrastructure as more of a public-private partnership, so kind of really governments or corporations investing in infrastructure. There's been this growing funding gap globally where governments and corporations just have high debt burdens and they need to focus on other initiatives. And so that's really the role private capital has been playing over the last several decades. But then if you look over the last 3 to 4 years, you really had this emergence of an infrastructure supercycle. The pandemic started and we were all working from home and everyone needed their data to work faster. Today data is the world's fastest growing commodity, and then you add in AI, and the theme of digitalization is just playing out more and more. But then when you talk about all these data centers that need to be built around the world, whether it be for cloud or edge computing or maybe AI training facilities today, power is often talked about as a key bottleneck. And so for us, the theme of decarbonization and really decarbonizing power sources is really important. And so it's about renewable power build out. It's about sustainable solutions, so investing in newer technologies such as battery, nuclear servicing type businesses. And then I'd say another theme that just continues to play out is reshoring. Today we're just talking about kind of where I'm from. I'd say, in the US, that's particularly important today. I'd just say countries and governments today are just giving greater weight and focus to supply chains, critical industries, and where those goods are coming from. And that's really, we're beginning to see that kind of around the world today. And all of that's creating different opportunities for us in the different sectors we focus on.
It seems like it is quite an interesting time in the space, and there's a lot happening. What impact do the big environmental and political changes have in the space, and how do you deal with that?
First and foremost, we are a long-term investor. So when we think about an infrastructure, we're not looking to capture 1, 2, 3 year short-term tailwind. We're really thinking about what's a theme or business that we want to own for 10, 20, 30 years, maybe perpetuity. And so we actually spend a lot of time looking to buy great businesses in good jurisdictions that we can operate well, because we find that you do well through market cycles. Maybe if we can't operate every part of our business plan, we still own a great business, good jurisdiction, And we've really proven for our investors that you can have very strong risk-adjusted returns doing that. And so we spend a lot of time thinking about regulatory risk, making sure we're conservative with our use of leverage, not chasing government subsidies, so that when there's a lot of the headlines that we're reading about in the news today, the experience our investors are having are really not negatively impacted from kind of the day-to-day headline changes because we're a long-term investor.
You touched on it there, that you take a longer-term approach, but I suppose, can you just give us a quick insight into the Brookfield strategy and maybe how that differentiates from other managers?
Yeah, I would say, take data centers, for example. We've been investing in data centers for almost 10 years now. We're a big believer in that industry and the growth and proliferation of data, and the data needs to be stored, processed, and transported because data is like any physical commodity. It's like air, water, and food. Anyone who's probably watching this video, or I know when I got out of the Uber when we came to talk to you this morning, the first thing I did was I didn't look for a car. I actually touched my pocket to make sure I still had my phone. And so it needs to be stored, processed, and transported. When we think about data centers, we've been investing in them in development capabilities the last few years, but then valuations got a little bit frothy. And so we kind of pared back a little bit. And now with AI, we're back and we're kind of investing in kind of the next growth tailwind of where we see that industry going. And so when we just think about it at the end of the day, it's how can we target high quality assets on a value basis and then look to enhance that value through an operations-oriented approach. And that's probably where Brookfield really differentiates ourselves. We've been an infrastructure investor for over 125 years. Our firm's DNA is owning long life, real asset related businesses. And so where maybe some other managers sometimes can just be more a financial partner, we're really looking to be an operating partner, supporting the C-suite, supporting the businesses that we work with to really drive value. And I'd say for us as investors and users of infrastructure, that's really important because we're dealing with assets that we deal with every day. And if we do our job right at Brookfield, you don't have to worry about how your phone has 5G, when you turn your light switch in the morning, how you have electricity, how it got there, what was the wind, solar source that kind of generated that power. That's ultimately what we're doing at Brookfield.
And finally, you obviously come from the US perspective, but are you seeing any opportunities here in Australia?
Yeah, I'd say Australia is one of our biggest markets. Brookfield, we are a global investor. We operate in 30 countries around the world. We have a very large investment team actually based here in Sydney, where we're having this conversation today. And we own many marquee critical infrastructure assets, such as a regulated utility in the state of Victoria. We just took private a company called Neoen. They're one of the largest renewable power investors here in Australia. We own an operating container terminal business called Patrick. And we really expect to continue to see very attractive opportunities throughout Australia. We have very strong conviction in this country.
Thanks for joining us, Sam.
Thanks for having me, Tom. Really enjoyed the conversation.
Thanks for tuning in. Make sure to check out our YouTube channel for more great videos.